Hey everyone, it's me, Deanna, your insurance exam teacher, and I'm here today to talk about provisions, riders, and exclusions. So, what are they? I'm going to talk about two of each of the main provisions, riders, exclusions that you need. And at the end of this video, you are going to understand what each of those terms mean, as well as the two for each main bits of information you need to know for your life and health insurance exam. And yes, some of this information overlaps into P&C as well. So please make sure that you are following along with me. And guys, if you are studying for your P&C exam, that right there is going to be the videos with the blue frame. So look for my videos with the blue frame, and in a minute I will show y'all exactly what I mean. So on YouTube, you're going to see my page just like this with the black frame. If you see it with blue, that means that it is for the P&C exams. If you see the green border, that is for your Series 6 exams, and those are coming, and I'm going to start adding more and more thanks to you all who are requesting for me to touch on these subjects and on these exams. So thank you all for the support. Make sure you like, comment, subscribe to this channel, like this video. Let me know your thoughts, your ideas, your questions, and let me help you pass your insurance exam. So guys, this video is about provisions, riders, and exclusions for your life and health insurance exam. And like I said, stick with me. Let me explain what these things mean, and you are going to have an amazing understanding of this. And guys, if you are studying for your life and health insurance exam, I do have a course where for 60 days, because that's all you need, your goal to pass the test is 2 weeks. And that is what I tell my students. I've helped thousands of people pass their insurance exam in 2 weeks. And this right here is going to be all you need to do that. 60 days, more than enough. In case you do need to extend it and whatnot, 4 weeks max is going to be your goal. But every Saturday, we jump on a live Zoom class, and it's me. I jump on a live Zoom class with you. I'm going to give you the answers, the information, and everything that you need. In order to pass your insurance exam, you get recorded videos just like this one where we go more into detail, more in depth into all of the providers, the provisions, the riders, and everything else you need to pass your life and health insurance exam. So check it out at this website, Insurance Exam Course. And if you want that one-on-one attention, I also do one-on-one tutoring sessions. Feel free to check out the description below to get that bit of information as well. All right, guys, so let's get into this specific course. So here's my other website. Feel free to check that out too. Again, everything is linked in the description of the video. So right here, guys, we're going to start off with provisions. What are provisions? So provisions basically are already built into your policies. Every single insurance policy that you get already has provisions. It is a description of actions to take. It lays it out very much in black and white, very clearly. It tells the insurance company will take this course of action if this situation happens. It also lays it out for the customer. So we like provisions because it tells us the details of what's going to happen next. So when you think of the word provision, I want you to think of the word details. So provisions equal details. Provisions equal details. Provisions equal the details of your policy, such as what is the policy start date? Does that policy end? Is it a term policy? Is it a 5-year term, a 10-year term? Is it a whole life policy? How much money does this policy give the beneficiary? What is the coverage amount? Do I have 100,000, 150,000? How much do I have to pay? Does my premium ever increase? If so, when and how much by? If you have those specific types of premiums or policies where your premium increases over time, or does it ever decrease? Do I ever need to stop paying it? Because there are some policies that you can pay up your premiums super quick, pay them up faster, and then you don't have to pay anymore, yet you're still covered for a certain amount of time. So all of these bits of details, you as the customer need to know. The provisions are responsible for making sure that you have that. The companies need to be super transparent with us. So What are the details of my policy? That's what the provisions are going to provide for us. Policy limits, if any, and that so more applies to health insurance typically. What happens when XXX? What happens when I can't pay my premium? What happens when the customer wants to reinstate their policy? What happens when I want to take this course of action with my policy versus that course of action? Can I even do that? So again, all of those details are laid out black and white in the contract so that the customer can know what to do and the company can know what to do. How do I borrow money from my whole life policy? How do I start paying my whole life policy? How am I going to get paid from that policy? When do I get paid? Do I even get paid, right? All of these questions we have as customers, our provisions are going to make sure the company answers. Okay, guys, so we're going to cover, like I said, two of the main provisions that come in a life insurance policy. And this right here is probably the most important one because this specific provision not only affects exclusions, it also affects riders, but it is our provision. It's going to tell us exactly when the company can take a specific course of action and when they cannot. So when can the company charge more, cancel a policy, and how? But also, can they even do anything at this point? And the incontestability clause provision affects exclusions, affects writers, and affects a lot of other things. This one is a really important one, so make sure that you understand this one. And basically what it is it tells you that the incontestability time period of an insurance policy, which is a time period in which the insurance company cannot contest, cannot fight, cannot argue, cannot raise premiums, cannot change the policy in any given way anymore, starts on month 25 of that contract. So for the first 2 years of the policy, and I'm doing this a little backwards, but the first 2 years of your policy from when you start it to the end of month 24, you, the company, has the ability to investigate the customer still if they feel they have to, if they suspect a little shadiness or whatever, and they find something out. Hey, you know what? We issued this at the price of a 30-year-old versus a 35-year-old. We just found out, we somehow slipped through the cracks. The customer is 35 years old. We are missing so much in payment. During the first 2 years, we can come in, we can increase the premium. If the customer fights back, we're able to cancel it. Month 25 to the end of that policy period, they're stuck with the policy and that premium the customer is paying. There is something else they do, but that I cover it more in my class. But no longer can the company come and ask the customer, hey, we need to increase your premium or we're canceling the policy, something like that. They can't do anything anymore. So the first 2 years of your policy period, the company can still ask a pilot who they didn't catch. They didn't catch that this person has an active pilot's license. Maybe they work as a teacher, but they're an active pilot. They should have signed the aviation waiver so that in case they do go back and work as a pilot, we don't have to pay if they die while on the plane, right? So they should have signed the aviation waiver. We missed it. If it's month 8, I can call the customer and be like, hey, I'm sorry, you need to sign the waiver. Or the company can cancel the policy because it's within the contestability period. Month 26, we find out about it. Now the company is out of luck, right? They are unable to call the customer and say, hey, we need you to sign this form. We can't raise the premium anymore. We can't cancel that policy anymore unless the company can prove without the shadow of the doubt that the customer committed fraud specifically with the policy. That means money laundering. That means some type of a money crime with the specific policy. So guys, contestability period, your company, the first 2 years of your policy, the company can contest. That means we can argue any given point that we find out about the company, about the customer, right? We can come to the customer and say, sorry, you need to pay more because of this situation, or we cancel the policy. If the customer agrees and works with us, awesome, best case scenario. Worst case scenario, the customer refuses to work with the company can cancel or make whatever adjustments they feel necessary. Month 25 till the rest of that policy contract ends, the company is SOL. We cannot do anything anymore, and the customer got away with whatever they were trying to do for the most part. So that is what your incontestability clause states. It states that after month 25, we can no longer make changes. We can no longer contest anything on the application, on the policy, or in that contract in any way, shape, or form. We're basically done. Unless your customer is doing what's the word that I just said? Embezzlement, money laundering, some kind of a money crime. That is what your incontestability clause states. And again, this is super important to know. Month 25 kicks it off because this affects exclusions, this affects writers, and a whole bunch of other bits of information in a policy. But month 0 to month 24, it's on, and the insurance company, if they feel like, hey, we issued the policy, but we're kind of iffy about this person, we still want to investigate this or that and see what comes out of it. If they want to, they can go ahead and do it. And if they find something, we can come in, try to change the arrangements of the policy, get the customer to sign this form, raise the premium, raise the rate, whatever, and make whatever changes we want to make at that point still. But the beginning of month 25 and on, we're done looking, we're done changing. If we didn't catch an issue by then, we're stuck. And that right there, guys, is your incontestability clause. So keep this one in mind. This is probably the most important provision of the bunch. All right, the next one, the assignment provision. This one, guys, keep this in mind too. This is a very literal test. So I don't want y'all to overthink things. I don't want you to make it more difficult or more complex, or what is the word that I'm thinking about? Elaborate than it has to be. Say it the way that I'm going to say it, learn it the way that I explain it, and this is going to make total sense. And this applies to so many of these exclusions provisions, writers, types of insurance policies. I also have a video on the different types of insurance policies, so feel free to go check that one out after this video, because if you're struggling in learning the different types of policies, and there's at least 16 or 17 of them, then that video will really help you. So feel free to check that out after this one. So guys, assignment provision allows you to assign partial or full ownership to somebody else. So you as the policy owner can go ahead and assign 50% ownership of your policy to your spouse. Let's say you are single, then you get married, you want your spouse to be able to call the company, ask questions, make payments, whatever, have ownership rights. You can go ahead and say on 7/8/2024, I have given 50% ownership to my new spouse, whoever, whatever. And now your spouse is owner of that policy. You can even say 100% ownership. So let's say that you want to sell your insurance policy or use it as collateral to get a loan for maybe a house or something like that. You have a $100,000 life insurance policy. Maybe you put 50,000% up for a bank loan. You can go ahead and assign ownership of your policy to the bank. You get your loan, that's your collateral. If you pass away, whatever you owe the bank still, they will be able to then go to the company and say, hey, we have ownership of this policy. The customer owes us $25,000 upon death. The company gets paid that $25,000 that they're owed, and then that's that, right? So with this policy, with this provision, I mean, we can go ahead and assign ownership to somebody else, either partial or complete. This is used in business transactions a lot. And that is what these types what this provision is mostly used for. Biadical settlements, which are also called life settlement options, assignment provision allows the customer to sell their policy to another company. They give them that 100% ownership over it. now it's their responsibility. If I, for whatever reason, wanted to give ownership of my policy to my mom or to my friends, whoever, for whatever reason, and wanted them to be able to make payments for me or call and get information, I don't have to ask the company. That is the thing. I can give ownership, assign ownership of this without permission from the company, but I do have to let them know in writing that I'm doing it within 30 days. Okay, so within 30 days of me deciding to give partial ownership of my policy to my mother, I have to go ahead and let them know as of 7/8/2024, my mother now has 50% ownership of my policy. It can be a quick email, it can be in writing, it can be however, but that is all that this provision requires. As of 7/28/2024, I, Diana Hinojosa, now sell 100% ownership of my policy to my bank. And now my bank owns my policy, right? And I can do that with my assignment provision. I assign ownership to somebody else or to some company, either all of it or part of it. I can use that maybe because I want to. I can do that because I want to. I can do that. I don't need a reason. That's what I'm trying to say, y'all. You don't need a reason to do this. So that is what this provision does. All right. So those are two main provisions that y'all need to know. And both of these affect the ability of the customer to do business transactions with their insurance policies and also to really get the full benefits of their policy, because this one can limit the customer as well. And we're going to get into that in a little bit, how that happens. But also just know in my class, we go into full detail. So now let's go ahead and talk about the exclusions. So provisions equal details. Exclusions equal subtraction. So when we are excluding something, we are excluding a cause of death from payment. Let that sink in. We are excluding a cause of death from payment. We are subtracting from this policy. Exclusions equal subtractions. Exclusions equal subtractions. Exclusions equal subtractions. If an exclusion applies when the customer dies, the company legally does not have to pay that death benefit. So if the customer dies doing this and there's an exclusion there, the company doesn't have to legally give the benefit to the family. They can if they want to. It's always up to the company, but legally they are protected from having to give that payment. There are several exclusions, but they all work in the same way. They are subtracting from your policy. So for example, our main one, that this one also seeps into health insurance as well. Attempts at suicide, that is. So suicide exclusion, if a customer commits suicide and it is the first 2 years of purchasing the policy, so from month 0 to month 24, if they commit suicide at some point at that part of your policy, the company legally does not have to pay that benefit. They have up to 6 months to decide if they will or will not pay the benefit. So suicide exclusion excludes suicide from payment. Excludes suicide from payment. So again, it expires at the 2-year mark. Why the 2-year mark? Incontestability provision, right? So we want to make sure, number one, that people are not buying insurance policies with the intention of committing suicide, because if somebody is in that state of mind, we want to make sure that they get time to get better, but that they also don't have these thoughts like, hey, you know what? It'll be better if I'm not here. They can get money, whatever, who cares, right? We don't want people to be in that state of mind. So it's a way to protect the customers, but also a way to protect the company from being taken advantage of. And people who have these types of thoughts from buying a policy and being able to do this type of situation, because it has happened in the past when this was not a exclusion in place. So suicide exclusions: if the customer commits suicide within 2 years of purchasing the policy, then the company does not pay the benefit. Now, the company, regardless of the time frame of when the customer committed suicide, actually scratch that. If they did it 2 years before, again, they have 6 months to wait to decide whether or not they'll pay or not. They still can pay if they want to legally. They don't have to, but they have 6 months to wait, because what if this wasn't a suicide? What if this was a murder staged to look like a suicide? Now, we need to let the police, the coroners, and all of the law enforcement individuals have a chance to really do their job and figure out, hey, you know what? Yes, this was unfortunately a suicide. Or, hey, you know what? This smells kind of fishy. There may be more to this situation. So we need to let law enforcement have time to really investigate these types of situations. So therefore, the companies do not have to make a decision for a total of 6 months. And guys, 6 months, that is a magic number for how long does the company have to do X. And X can mean anything. Make a payment, pay out a death benefit, backdate policies, literally anything that the company needs. They have 6 months to be able to do it. Why do they have 6 months? Because companies, especially the larger ones, have a lot of paperwork, a lot of situations, a lot of things to deal with, right? So we need to make sure we give them some time to do their stuff and to do their jobs correctly. So in our case, how long can the company wait to make a choice on an exclusion? 6 months. When does the suicide clause expire? Month 25, which is because of your incontestability clause provision. Remember, I said that incontestability clause provision affects exclusions and affects the writers as well, and the whole policy just kind of in general in different ways. This is one of the main ways that it does that, and one of the exclusions that it directly affects. So make sure that y'all are aware of that as well, and keep that incontestability clause in mind, because it comes up and affects a lot of what we can and cannot do in the insurance exam, or in general, but also the exam. All right, so next one, the illegal activity exclusion. And again, like I said a while ago, these are super literal. Illegal activity: if the customer dies while doing an illegal activity, then the company legally does not have to pay the benefit. And we think illegal activity, we've seen a lot of movies, right, where like drug deal gone bad, high speed chase down the highway. Well, those are illegal. It can literally be they were in a car crash, they weren't wearing their seatbelt. It is illegal to not wear your seatbelt, therefore we don't have to pay. And it could be more innocent than what we imagine, right, when we hear illegal activity. But of course, all of that fits. They were partying, he overdosed. It's illegal to have drugs. They were drunk driving. It's illegal to drive drunk. We don't have to pay, right? And of course, that drunk driving example is not super innocent either. But of course, nobody gets behind the wheel thinking that's going to happen either. But y'all know what I'm talking about. Y'all know what I mean. Any type of illegal activity, and it could be the more innocent ones to the more extreme ones. But if the customer dies doing an illegal activity, company does not have to pay. And that is your illegal activity exclusion. And again, guys, there are many more provisions, there are many more exclusions, there are many more writers than what I'm going to cover in the video, but these are some of your main ones. And if you do want to go through all of the other ones, feel free to check out my website. Feel free to check out the resources linked down in the description, and check them out so that you can get the more in-depth explanation to all of the writers, exclusions, provisions, and everything else you need to pass your insurance exam. Let's go over the writers. So writers, these are additional. These add to the policy. Provisions give you details. exclusions, subtract, riders, add. So here we're adding to your policy benefit. So riders add, riders add, riders add to the policy. Also, a lot of the times they're also going to raise the premium. So they add to the premium price as well. So riders add to the policy, add to the premium. And they are additional, they are optional. The customer can choose which rider they want and which riders they don't. This is one of the cases where I can go ahead and call the company 3 years in and be like, hey, you know what? I think I want to add the accelerated death benefit rider. Okay, great, we can add it. We're going to raise the price. This is the price. This is one of those situations where I can go ahead and call at any given point, add a rider or take a rider away. Or I can always call and be like, hey, you know what? I want to take my accelerated death benefit rider off of my policy. Okay, that's fine. Starting next month, you will not have that rider anymore. You will not have that additional benefit anymore. And your new price is whatever it is, right? If there's a price change associated with it. Sometimes some companies will give specific policies with riders already included just to make their policies more appealing and more sellable to the public. But typically, companies will have customers decide, I want this one, I want that one, and they kind of can add it a la carte. So anyways, a rider, again, it's going to add benefits to the policy, and it's probably going to add money to the premium. Sometimes they cost as little as $2 to $3. Sometimes it's as much as $25, $30 plus. It depends on the rider and the benefit that it is offering. Okay, so that's basically what a rider is. It's going to be additional coverage for your policy, and it's going to cost a little bit of money. Oops, right there, y'all. Sorry, y'all. I did not realize that, but here we are with our accidental death and dismemberment rider. Okay, so accidental death and dismemberment rider, also known as the AD&D rider. What this one is, we can add it to either a term life insurance policy or a whole life insurance policy. So we can add it to either riders, you can add to terms, you can add to whole lives. Some of them can only be added to one or the other. Typically, you can add them to either or. What it does is, let's say you have a policy of $100,000 and you add the AD&D rider. Maybe this one's like a cheap one. Maybe it's like an extra $3 to $5. Okay, we're happy. We're good with that. If the customer dies in some kind of an accident and or is dismembered to whatever degree, to some degree, that $100,000 benefit is going to get doubled and the family will get $200,000 if the customer dies within 90 days of the accident. So let's say that your customer was in a car accident, was taken to the hospital, was in the hospital for 91 days, then they died on that 91st day. Now it's just going to be 100,000. We do not double the benefit because they did not die in that 90-day frame period. But if they do, if they die on day like 86 or 87, yes, they're going to get their benefit doubled. Now, also important to know, it expires at the age of 65. So if your customer is 66 when it happened, died on day 13th after an accident, but they're 65 in 1 month, maybe their birthday was last month, it expired, does not get doubled. So that is one thing not a lot of people pay attention to. That is one thing not a lot of people know, and how the insurance company will structure the question to trick you. So they will add in the customer's age. They bought it at 45, they died at 66. How much does the customer get? The customer gets their regular benefit. The customer died on day 87, or the customer died on day 93 at the hospital. How much does the customer get? The 87th gets doubled. The 93rd day customer gets the regular benefit, or the beneficiary gets the benefit, but y'all know what it means. Be on the lookout for that trick. They will definitely throw that in there for you when it comes to the AD&D rider. And I promise you, you will see questions on this rider because it is one of the most popular one. And also be aware of your accidental death and dismemberment policy. Your policy is a standalone life insurance policy that is not the rider, number one. We don't add a policy to a policy typically. But it is two separate things, and I made an entirely different video for that. I will link that one down below in the descriptions. If I can, I'll put it somewhere here. So make sure you can watch that one next, telling you the differences between the accidental death and dismemberment rider and the accidental death and dismemberment policy. That is another way the test will trick you. That is another big important thing that a lot of people who take this test end up confusing, end up making mistakes on, and end up losing points on. So make sure it does not happen to you. And if you have questions, drop them down in the comments, guys. All right, my next one, my accelerated death benefit rider. My accelerated death benefit rider, just like the name says, your death is accelerated. You are now terminal. And now you can get money from your policy. And hopefully that doesn't happen to anybody watching this. I do not put that on anybody watching this. But when it happens to one of your customers, if this were to happen to one of your customers, because sadly, sometimes this does tend to happen, we have a benefit for them. Now, this one, in order to take advantage of this, they must already have it on their policy when they are told by their doctor that they are terminally ill. But let's say your customer is told by the doctor, sorry, customer, you are terminally ill. You're going to die within 24 months. Okay, guys, it has to be 24 months. When the customer is told this, they trigger their own personal incontestability period, 2 years. And now they have 2 years or less to live. They can take advantage of this rider if they already have it in place. This isn't something that if the customer is told by the doctor they're terminally ill, they can go and add it. There are other options for people who end up in that situation, but if they already have this, they can call the company, give them the paperwork, give them, their company is going to check with the doctor, and they can ask for up to 80% of their death benefit while they are alive. Let's say your customer has a $100,000 policy. From this $100,000, I can say, give me 80%. They will give that $80,000 to the customer. No penalties, no fees, no nothing, is straight up $80,000. Now the customer can use that money to go to the doctor or do whatever they want to do with that money. That 20% stays in force with the company. The premium still has to get paid because the company is going to give that 20% to the beneficiary once the customer dies. So premium does not change, ownership does not change. We still have to pay that premium monthly because it's going to be considered a fully paid out policy once the customer passes away and once the company gives that 20% to the beneficiary. And again, guys, 24 months is how long the customer has to be told that they have to live, 24 months or less. And that right there is going to tell them, again, their incontestability clause kicks off, but that right there tells them how long they have. Now, let's say best case scenario, the customer is given this timeline and they beat it and they get better. They live beyond those 24 months. Now, once that 25-month period hits, the customer is still alive. The company is going to come looking for your customer. Hey, you owe us $80,000. And then the customer is going to have to go into some kind of an agreement with the company so they can start paying that money back towards their policy. All right, so that is how this one works. And again, your incontestability clause rule affects this policy, this rider as well. So one more example of how that incontestability provision affects the riders and affects the exclusions. We talked about that with the suicide clause. So incontestability provision, very important. Make sure you know it and understand it. And guys, that is going to be the end of this video. Please make sure you like the video. If you thought this was helpful, subscribe to my channel. Again, I did mention, go watch my AD&D policy versus rider video. Go watch my types of life insurance policies. I break down what a term policy is, what a whole life policy is, and the different types of policies. And if you are interested in my course, Make sure that you go to my websites. The descriptions are down below. I've got resources. I've got information that is going to help you pass your insurance exam. And if you are interested or have questions, drop them down in the comments. Let me answer them. And make sure you subscribe, follow, and let me know what you all thought, guys.